With a changing market, investing success requires a clear strategy and a track record of performance. If you're serious about building a property portfolio, you need to speak with Lachlan Vidler and his team at Atlas Property Group. As a national finalist for 2022 Buyer's Agent of the Year, Lachlan and his team are ready to build and scale your portfolio in any market. Whether it's financial freedom or a more secure future, Atlas Property Group is here to guide and support your personalised journey. Visit atlaspropertygroup.com.au to book in your discovery call absolutely free of charge.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Okay, how you going? Phil Tarrant here, host of the Smart Property Investment Show. Hope you're well. Hope you're smiling like a lot of property investors following the announcement from the Queensland Government that they're not going to impose these new land tax increases for out-of-state investors or domiciled out-of-state investors. So it's a big win for property investors and also I think renters. They're sort of pulling back on that potential new tax coming through. We've been talking a lot about it on the Smart Property Investment Show. You can tune into it. But I just want to make that note. It's good to see common sense prevailing and a lot of it driven, I think, by the New South Wales Premier being pretty clear around it's against the Federation to actually start taxing people that don't live in states, and I completely agree with him. So we can now move forward with a certain sense of continuity as investors. As you all know, I've got quite a Smart Property Investment has quite a large portfolio in Queensland, so that's given us a lot of assurances to how we can continue to grow out those assets there and what we're going to do with them. And I'll sort of go into that a little bit more at a podcast in the future. But property is an interesting beast in that a lot of the professionals that work inside of property originate out of being investors themselves. And I don't meet many buyer's agents who just become a buyer's agent before they started buying property. Typically, the journey is to buy a lot of property themselves, like the process, not be too happy in the job that they've got and sort of transition that love affair for buying property into a profession. We have a lot of people on the show that talk around this, and I don't want to drill too much in the buyer's agency stuff. I always like the backstory of these type of professionals now inside of real estate. And you might not think that working inside a casino and property has a lot in common. You may think that there's a bit of a bet on both sides. You got to play your luck sometimes. Maybe that's most people's familiarity with it. But Kev Tran from InvestorKit, he's a buyer's agent there, seems to think there's a lot more connected. And I think he spent about 8 years working in casinos before he ended up being a buyer's agent. Kev, how you going? Welcome to the show, mate.
Thanks, Phil. Great to be here.
So casinos to buyer's agent and a bit of a journey in between. You've only recently started with InvestorKit, is that correct?
Yeah, just recently started with InvestorKit, but I've been a buyer's agent for about a couple of years now.
Okay.
So yeah, over 70 purchases across Australia. But yeah, the transition from casino over to buyer's agent, it's quite a rare role in itself, working in the casino. But in my particular role, it wasn't as a dealer or anything like that. I was looking after high net worth individuals in the sales team. So my role basically was to convince New South Wales patrons to choose to travel to Melbourne and visit the Crown instead of their local venue. So, yeah, it was fast-paced kind of
Yeah,
role.
I want to get in that because I reckon that's a pretty interesting job. So essentially you're a salesman or were a salesperson.
Yeah.
How you finding InvestorKit?
Mate, absolutely fantastic.
Yeah, good operation.
Good operation.
Arjun Paliwell knows what he's doing.
Yeah, I've been following his research for years now. I actually use it for my own portfolio. So, yeah, it's amazing to be in the inside now.
Yeah. And what's your sort of main focus there? It's going to be the research side of things, or is it more of the negotiation of the assets once you sort of identify good properties?
Yeah, negotiation. So in partnership with the InvestorKit research team, Arjun, head of research, and 5 full-time property nerds, work closely with them to identify these locations. And then once we found the right location, the right asset, my job's to come through and get the best deal. Okay.
And that probably draws on your negotiation skills working inside of casinos and persuading high net worth individuals to travel to Melbourne rather than Sydney. So how would you find these high net worth? How would you know they were gambling inside of Sydney casinos at the start?
So probably a couple of ways. So you've got your existing clientele who've got their membership cards, been playing for a while. So you've got all the records of their play. But then you've got a whole bunch that are newer in the space or they haven't visited yet before. So, the industry is quite small. At the time, there was one major casino in each city. So you're talking like the people that we're looking after, they bring in 50 grand, 100 grand for a weekend. So everyone kind of knows who they are. It's a smaller pool. And yeah, the ones that haven't visited before, your job is to get an introduction to them, and then convince them to come over.
Yeah.
The people who have visited before, they've got a lot of options. So your job is to get them back,
Yeah. What do you sort of classify a high net worth individual in the casino world? They might not necessarily be a high net worth individual, but they're happy to spend a lot of money in the casinos, right? Or is it one and the same? What's the classification?
I mean, I guess a bit of both. It's about turnover and how much they play, not necessarily how much they lose or so forth. But, you're talking people who, because I was working on the interstate side, so we're talking people who were comfortable to bring at least 25 grand, per weekend, and be prepared to play with it as well.
Yeah. And do you see most people blow their dough, or do you see a lot of winners in there as well?
Well, to be honest, over time, if they come for one trip and they got a bit lucky, that's great. But typically, they'll come back, and over time, the house wins. So.
Yeah, house always wins. Yeah. Are they quite precious people to deal with? Probably a lot like property investors, right? Quite precious people.
Yeah, I guess some, and you got to work through it and understand motivations. I think that's a key takeaway for me.
Nice people, mainly.
Yeah, a lot. Like some of my, I'm really close with a few that I used to work with. As clients. Yeah. Over time, and that's kind of the reason we can get to a bit further why I made that transition, because over time you develop relationships with these people, and I don't want them to lose. You know what I mean? So. I guess the whole polar opposite, try to build wealth now, which is kind of the goal. Yeah,
and you must see it thinking back on operating inside of that industry, that community, and it's got its own sort of subculture. People who frequent and like to have a good punt at the casinos, but rocking up with 50 grand, 100 grand for a couple of nights of gambling, you'd be sitting there thinking, well, that's a house deposit, right? Like, you'd be better off if you want to make money over time, putting that into a deposit in a home. And I guess that's where you are right now. What's most people who are sort of gambling at that sort of amount, they were prepared to lose it, right?
Yeah, exactly.
They weren't sitting there going, this is going to wreck my life type of stuff.
Yeah, exactly. So obviously lots of thoughts and potential stigma around the industry in itself, but I think overall, if you've got a regulated industry, it's better than a non-regulated. And you can look at cultures all around the world. Gambling's always existed and always will. So you're better to have one that's regulated. And again, it's all relative, like you said. These people, they were worth multi-millions. One of my clients back then, $250 million in net worth. He could drop 50 in a weekend and be like, "I'll see you next weekend." So it's all relative. Obviously, you do your best to make sure you follow protocol, but yeah, it's crazy the amount of money that was going through. I talked to them as well, and I'm like, "Mate, what do you do? Like, they're obviously
what was most of their jobs? Property."
Well, a lot of them, they had successful businesses in all different industries. Most of them were business owners. One of the ones that I've talked about previously, that we're good friends with now, is one of Australia's largest seafood exporters to Asia. Yeah. So I get to talking to them. It's like, well, you're obviously making a lot of money, but what's really helped you kind of grow that wealth over time? And properties kind of the answer.
What a great opportunity to learn from a lot of people. I guess they're there for a bit of fun, right? That's recreation for them, having a punt, but they've got the cash flow to do that, and they're going to do that through business or property. What was the highlight of your casino career?
So I got in when I was 21, and at the time, dream job. You think it's really cool. You wear a suit, you get to go to all these cool events. Melbourne Cup, got to go a few times, and honestly, just like Crown Melbourne has a helipad right in front. Yeah. So you'd take people to helicopter winery tours and stuff. So it comes with a lot of perks. And I think for a young 20-year-old, early 20s, it's
great.
Cool.
You wouldn't want to do it now, right? It'd be a hard life.
No, I've got an 8-month-old baby at home. I love the fact that I can work from home and stuff like that. So
yeah. No, it's casinos. Some of the casinos in spot of bother at the moment. They're losing their casino licenses for how they've acted and operated. So outside of the scope of this particular podcast, when did you start investing in property, Kev?
I invested in property when I was 25.
Okay.
Yeah, in 2015.
2015. So what's your family background? Where's the family from?
Vietnamese.
You're Vietnamese, are you?
Yeah.
When did your family arrive out in Australia?
They came in the 80s, early 80s, yeah.
Yeah, okay, which is I think most Australians are quite familiar with the journey of many Vietnamese migrants after the Vietnam War. You were born and bred out of Australia then?
Yeah.
Well, what was your attitude towards money as a kid? Did you sort of learn much? Was it, instilled? Culturally, is that a big thing in Vietnamese communities?
In our particular family, saving was a big thing. Saving was a big thing, being quite frugal. So those traits I learned off my parents. But in terms of wealth creation and investing, not so much. So that was really kind of something that I learned later in life through these high net worth individuals working in the casino and just understanding like there's a whole world out there that I'm not familiar with. Like I'm from Southwest Sydney, and growing up it was about saving, and you say, wow, there's all these rich people, and I was always curious, how did they get it done? And the curiosity kind of sparked from there too.
Yeah. What do they think about your job persuading gamblers to spend their money in Melbourne rather than Sydney?
Oh, my parents just asked me, how much do you get paid? I told them, like, okay, that's all right.
Yeah. Well, they're probably quite surprised what you're getting paid, right? As a young bloke, no doubt you would have had an okay base salary, but a lot of it would have been incentive-based, right? Based on how much is spent?
Yeah. So overall, if you're doing pretty well, there'll be a small bonus kind of thing. But
yeah. Yeah, no, that's cool. So, it's sort of, I wouldn't say I was big in the gambling world. I've been to casinos before, and it's not my thing. I'd rather sort of spend my money on areas where I've got a little bit more control over, and that's the reason why I invest in property. No doubt, that's the reason why you do. You've got a pretty good little portfolio here, Kev. I want to sort of give our audience a bit of a view on it all. We'll just go to a break beforehand. Stay with us. Back in a moment. Welcome back, everyone. Phil Tarrant, host of the Smart Property Investments Show. I'm with Kev Tran from InvestorKit, property investor, buyer's agent, ex-casino worker. And I bet you're happy you're not doing that anymore.
I love it.
Yeah. So being a buyer's agent is better than working in the casinos.
Absolutely,
Yeah. So if you meet someone new and they go, what do you do for a living? What do you tell them these days?
I help people build and scale portfolios. Yeah. Just for whatever reason that they want, passive income, financial security, family wealth. Yeah, I'm super proud and happy to do it,
Yeah, and you've been a buyer's agent now for a couple of years, transacted over 70 purchases. Most memorable purchase that you've made so far for a client?
So I'm in the investment space predominantly now, but when I was doing some initial purchases, one of my first was an auction that I got for an owner-occupier, first home buyer in Sydney. This was January of last year, during the peak boom. So they'd missed out for over 9 months, and they came through as referrals from friends. And we helped them get their Art Deco apartment in Ashfield at auction, and that was probably the most memorable and emotional for me too.
Yeah, it's good when you get it. And you see that in a lot of buyers agents, they get a lot of satisfaction out of seeing people realise this, whether it's their first sort of pathway into property and wealth creation, or they've done it many times. I don't know many investors that still doesn't get excited about a buy, even though if you've got 50 properties, right?
Yeah, exactly.
That's the way it works. So your personal portfolio, Kevin, when did you start buying?
So it was 2016.
Okay, that's when you're still working in casinos?
Still working casinos. I left there about 2020.
Okay.
So 2016, probably for, I'd say 3-4 years before that, I was saving pretty well.
Yeah.
I didn't know what I was saving for. I thought maybe property, shares, I don't know. But I was saving a decent amount of my income. I was living in share house type of thing, so I paid rent but not much. And 2016 came on board. A family friend said, he's a developer. He said, hey, you're going to invest in that with that money? And I said, oh, yeah, I want to, but I don't know where to start. I'm too busy. And he suggested this property in the city of Casey in Victoria, up and coming area. I believe it was a hotspot back then as well with a few reports. So I was pretty interested. Now, my first one was probably the one that I call the one that I learned the most lesson. I think for a lot of investors, you make a bit of a mistake. Didn't do much research. This one was an off-the-plan townhouse, 3x2x2 on a really small, like 200 square meter, land size. It was November 2016, 450K. And the main reason why I went there is I had a bit more than 10% deposit. And I knew that, okay, we can do 10% now. And then when it settles, I'll have the rest kind of thing. And up and coming area, Melbourne's, good. I can't afford Sydney, living in Sydney. So I thought townhouse is the next best thing. It's a good idea. I heard about people buying it off the plan, and then by the time it settles, it's gone up in value. So that's what I thought. And the market was doing quite well around that time as well. So I did that, and I was told 2 years build time.
Okay.
So I'm like, cool, that's all right. I'll be able to settle by then and whatever. Early 2018, I was told there's going to be a delay probably until end of 2018, 2019. So I was like, what, another year? So from 2 years to 3 years now. So obviously I was a bit annoyed. I'd saved up a good amount of deposit. I had enough for 20% plus more. And from there I decided I wanted to invest in an actual established property.
Yeah.
Yeah.
It's off-the-plan purchases can be tough for investors, particularly if it's your first one. And I've seen a lot of people sort of stop investing as a result of a bad first purchase. And I can't remember what the stats are. 80-something% of all Australian investors only own between 1 and 2 properties. It's because they often buy the wrong property first. And if you think about it, you've signed up a commitment to buy this off-the-plan apartment, off-the-plan townhouse. How much did you need to front at that time of signing?
Just 45.
45. So you're going to buy this. You didn't give them the whole 10% deposit then?
I did.
You did?
Yeah.
Okay, so you tied up your money for 3 years that you couldn't do anything else with it.
Yeah, again, it was the education part.
Yeah.
And obviously it's from a family friend kind of referral. There's an element of trust there. And it's like whatever. Like on the surface, it made sense, like Melbourne, growing area, all that stuff.
Yeah. But I mean, that's $45,000. Like, if you went and put that somewhere else for 3 years and then pull that money out, you probably could have had 2 properties, right?
Exactly. I didn't even understand the term like compounding growth. So the 3 years it took for it to settle, and it was the same price when it settled, by the way, like there was no growth by that time. So I realized I could have had all this growth. But I guess for me, once I put that down, that deposit, even though I didn't have a property yet, like mentally, I felt like...
it felt like an investor.
Yeah, I felt like an investor. So then I got into the research and podcasts and books and stuff like that. And that's when I realized, I could have done so many other things.
So did the property value up where it needed to be at the point of settlement?
Yeah, it was the same price, purchase price. Yeah.
Wow, it's just purchase price.
Yeah.
Okay. And you still got the same property?
I still got the same property because the last couple of years have been really good.
Yeah.
And it's actually gone up quite well, like about 33%.
Okay. So you're at $600K now and $450. So you've got a bit out of it, but probably the lessons from it, you wouldn't do it. We wouldn't do that again.
I mean, if I was going to make a mistake, then that's probably the better one. Like I didn't.
It's not a bad mistake.
Yeah, like I didn't buy an apartment kind of thing. But at this stage, because of its growth, I'm like, maybe I should hold on to it and see how it goes. But maybe its future growth potential isn't as strong as something else I could do. So maybe I'd sell that and buy another
at some point in time.
Yeah.
Yeah. But was the build good? Wasn't any too many problems with the build except for delays and stuff?
Just delays. So luckily on that side, maybe they're actually going through properly. I got a building in Pest for a new build, when it was done. So everything checked out, which is good. Yeah.
Well, it's good to be reflective of these buys. And to be fair, the fact that you've propelled yourself in other properties means it wasn't too bad. It's just a missed opportunity, really.
Yeah, exactly. So you learn about like the...
At a point in time, you probably could have had a lot more risk in your buying because you're young and, pretty new to this sort of stuff.
Yeah.
Yeah. What was after that? How long did that stop you from buying? Or did you have to wait till that place settled and you've got it before you bought another place?
No, I actually, so 2016, I remember I put down the deposit, got really excited, started researching about things, and then realized that, okay, I probably could have bought an established property. The main reason why I did the off the plan was I only had 10% deposit for a bit more, and I thought I couldn't buy an established because I need 20% because everyone's saying don't pay LMI. But I didn't know until later, after doing more research, that I could have looped the LMI into the loan. Yeah. It wasn't upfront cost.
Yeah, it's called capitalising the LMI. So you pay it off over time and most people don't even notice it.
Yeah, I didn't know at the time. And I'm like, I could have bought an established home, bigger land size, all that stuff. So a lot of research. And then by 2018, I remember early when I found out about the delays, I was ready to actually buy another property with a 10% deposit. So by that stage, I did a lot of research. And I identified regional Victoria as potential. Okay. And I kind of went down that path of I want to buy an established one with, that's already growing, so I can get straight away compound growth.
Yeah. And where did you buy that second place?
I decided to go with Ballarat.
Okay. Yeah. Ballarat's a good spot. Regional Victoria, big manufacturing hub in Ballarat.
Yeah.
For defence stuff. Talis is out there. I think Australian Defence Apparel is out there, and still continues to grow. And I reckon you've probably done well out of this. When did you buy this property?
This was in mid-2018.
Okay.
Around August, I think it was, for $385.
With a 10% deposit?
10% deposit.
With LMI capitalised into it?
Yeah. Okay. So, I had a few other costs involved, but it was, I had more than enough for it.
So how much cash did you need to front in order to get into that? Like 38 plus a bit of
I think
stamp duty and whatnot?
Yeah, exactly. I think it was like 50 something or 60.
Yeah.
I can't remember exactly, but it was, I had more than enough.
Yeah, and you've identified Ballarat. Did you go out there yourself and drive around and find this joint, or did you do it all over the internet?
I actually did. I went all just internet. I didn't go there myself.
Okay.
Yeah.
So you didn't even see the property before you bought it?
No.
No?
Yeah.
Okay.
So
it's quite bold.
Yeah, I mean, for me, I guess I've always been, clearly with number one, but I've been quite decisive once I do all the research. Once I have done research, but I'm quite happy to kind of move forward and pull the trigger if everything logically makes sense. And I know that with the Ballarat as well, it wasn't, like a new build where the area was underdeveloped or whatever.
Yeah.
It's a real place. I had someone go through for me.
Okay.
So I didn't physically do it, but I had someone to check it out, make sure that the videos look like the pictures
Yep.
and stuff like that, and understand the local area as well. So
Where in Ballarat is it?
North Ballarat.
Okay. So the sort of area there is just typical sort of regional suburban neighbourhood, right?
Yes, suburban neighbourhood. Obviously, the area had lots of infrastructure spend. Like what kind of drawn me was like a $5 billion rail link, right? So it's obviously going to connect Ballarat to the rest of Victoria as well. But when I was looking at suburbs, I was looking for areas where it was kind of close and it had good transport hubs.
Yeah.
It's really close to the CBD. So, yeah, that's where I went with it.
And it's got its own sort of own economy, Ballarat, and jobs for life for a lot of people, generational jobs for a lot of people out there in some of those defence manufacturing facilities. So you pay 385. What do you reckon the current val is on it?
This one is probably about 700.
Okay.
Yeah, I actually refinanced this one for my third property.
Yep.
So I did this last year in February, and at the time it was 630.
Okay. And it was just is it a fibro house, a brick house?
It's a brick veneer.
Brick veneer.
3x2x2.
Yep.
600 square block, pretty flat.
So just a standard
house. Ticks all the boxes kind of.
Yeah. What sort of rent are you getting on it?
$450 now.
Okay.
Yeah.
Sounds a bit light. You reckon you can ratchet that up, or you happy with it?
I'm happy with it. The tenants are looking after it pretty well. Yeah. They've been there for a couple of years now, so.
And you've had significant growth on it then, so you pulled the cash out of that for the next purchase.
Yeah.
Where was that?
Toowoomba.
Okay. Toowoomba.
Yeah.
What did you buy up there?
I bought another brick house in Wilsonton. Yeah, this one was $405K. It's a 4-bedder, 2-bed, 2-bath, a bit of a larger block, 650 squares.
Yeah. And why Toowoomba?
I actually was listening to SPI and Arjun. I followed the trail. He was talking about regional Victoria.
Yeah.
He was talking about Bendigo and Ballarat, so I kind of highlighted that area, like Ballarat for me. But then he talked about regional Queensland as an up-and-coming area. So I remember with my second purchase in Ballarat, I wanted an area that it was already had that growth, so I could kind of had high confidence in it. Because obviously I've got the townhouse that, probably not going to see any growth for a while. And then because I had done pretty well with the Ballarat one, I was happy with an area where I could enter maybe at a lower price point and kind of be early in there, get some higher yield as well.
Yeah.
So yeah, Toowoomba was kind of highlighted there, second largest inland city in Australia after Canberra.
Yeah.
Lots of infrastructure. So diversify a bit as well in Queensland.
So you're happy with the buy?
Yeah.
Yeah. And are you buying all of this stuff in your personal name?
Yeah.
Yeah. Okay. Yeah. And so what's next for you then? It's 4 properties. It sounds like you've just begun.
Yeah. So I think for me, working out like a long-term plan where I want to be over like a 20-year time span, I'm on target. So I think for me, the next couple of years, maybe 1 or 2 more purchases. But I've just had my son earlier this year. He's 8 months now, so took a bit more of a defensive strategy
priorities
as well.
change, right?
Yeah, I got life insurance
Yeah.
and like a bigger buffer in place. So yeah,
How big a buffer do you have?
6 months.
Okay. To pay the debt on these investment properties.
Yeah, So overall, in terms of my lifestyle as well, I've kind of worked out about 6 months.
Yeah. Okay.
Yeah,
That's pretty good.
with offsets and everything.
Yeah. You married yet?
Yeah.
Married? Yeah.
Yeah.
Okay. You paid all that stuff down then. You say big expense, the old.
We actually didn't. We actually didn't have a massive wedding and all
Okay.
that stuff. We
Yeah.
just like registered.
Yeah.
Maybe later. So I've kind of done things backwards. Investment property first, baby, partner.
Yeah.
And might buy the family home later. So I'm rent investing at the
Oh,
moment.
that's okay. But the thing, you're in the right job now to learn what is worth buying and when, and I guess within the InvestorKit family, to your point, property nerds, that's what Arjun calls his podcast, right? So it's a term of endearment, very much geared towards that sort of philosophy in identifying the right assets. So your job very much is around negotiating the assets once it's identified by the InvestorKit crew. So you must have some secret sauce there. I'm going to ask you about that, but we'll go to a break beforehand. Just stay with us, everyone. We'll get back to that in a moment. Welcome back, Phil Tarrant from Smart Property Investment with him, Kev Tran. Kev Tran, you got your own website, haven't you?
Yeah, kevtran.com.au.
Kevtran.com.au. What's on kevtran.com.au?
Mate, just a bit more info about our purchases, our process, and how we can help.
Okay.
Yeah, scale properties to
there you go.
3+.
So when do you get involved in a real estate transaction inside of InvestorKit? The property nerds would go, this is the area we're buying in. These are really good assets. They go, Kevin, we want to buy this. Go and buy it. Is that how it works?
Yeah, so even before that, clients come on board, either they inquire with me and I can have a chat with them. But let's say they've decided to come on board with us. The first thing would be to have a portfolio mapping session. So before we're talking about which property we're going to buy, we need to understand what's the overall plan. So we work backwards from the long-term goal, passive income, net worth kind of targets and time frame. Some people, they've got 20, 30 years, some people have 10 years. So we work backwards, and that would determine what do we need to do first? How does that go into the second property, third property, so forth? So we do that mapping session, get a bit of an idea, and then we're both held accountable to it, the client and ourselves. And then we'll go and look for the first one once we've narrowed down that brief.
Yeah, and no doubt agent relationships are pretty important. And it's, the market has swung back into the favour, I believe, or the balance of power now sits or is sitting with the buyer's agent rather than the agent. Back a year and a half ago, good luck even getting an agent to return your call if you're a buyer's agent. They were sort of going, don't worry about them. We'll sell it for top dollar to someone not using them. I think it's changed quite a lot. How do you go about, what's the secret to really getting an agent's attention so they know you're a serious player?
Yeah, so I think regardless of you using a buyer's agent or not, it's really important when you first reach out to an agent, you want to make sure that you've identified yourself to them as someone who's a serious buyer. But it doesn't matter what kind of market we're in. Agents, they've got so many people inquiring, and a lot of people, to be honest, do waste time or they're just having a look. So I think self-qualifying first, letting them know that you're a serious buyer and your finance ready, you're pre-approved, you've done research on this area, this is the type of property that you're looking for, and your time frame. You're ready to buy now. So I think when you position yourself, then they go, okay, cool. Right, Kev, Phil, serious buyer, whether this one or not, I've got someone that's, especially now where there may be a little bit less buyers because of the sentiment in the market, it's worth even more.
So how do you go about, and how important is it understanding the drivers of the seller, the gathering good intelligence to help you sort of work up how you're going to package putting a deal together back to the agent? What tips have you got there?
Yeah, so I think I talk to a lot of buyers, and when they are going into the market, they want to go, price is obviously a massive factor, but there are other things as well that are important to the vendor. Like a lot of vendors sell off market to us because they want a quiet sale or a quick sale. So then you got to think there are a whole bunch of vendors who they have different motivations as opposed to just money. So then I think part of crafting a good offer is understanding how to craft it, and how to craft it is understanding intel. So asking good questions. Let's say it's an owner-occupied property. Ask the agent, is the vendor, have they moved elsewhere? What's their situation? Do they want to rent back? What sort of settlement timeframes are they looking for? Because sometimes they don't want a quick settlement. That'll freak them out. They've got to move out in 30 days. Just ask those questions so you can craft a good offer and gather that intel,
So how much of the offer typically is price versus non-price considerations, do you believe?
Price is always going to be a massive consideration. However, we've come in with lower price points just because we've been able to craft a better offer with our conditions and timeframes. So that kind of leads into the next one as well, which is timing. You could be the best offer, but if you're too slow to come through with an offer, or you come in too quick, or whatever it is, and you don't do it correctly, it can not work in your favor. So when I mentioned timing, it's beating other buyers who are still having a think. So the first open home was on the weekend, and now the agent's collecting offers. And if people are still kind of having a think, doing some due diligence, and you can come in with a strong offer quickly, you've got all your ducks lined up in a row, then potentially you can come in before the other buyers. Yeah. Timing is...
So you spoke about decisiveness, right? When you're ready to do something, you'll go and do it. So the same would apply when you're buying for other people. If you've done the planning, the goals, where they're heading, what you want to be buying and where. When you find it, buy it, right? Don't sit around idle.
Yeah, exactly. Yeah. If everything makes sense, and especially with an investment, it's got to make, the numbers need to make sense. Everything else checks out in terms of the due diligence, then what else are you really waiting for, right? So you've got to go ahead, and there's a few levers that you can pull to kind of have that scarcity aspect, because especially now with the sentiments dropping and not many qualified buyers potentially, if you've got other options for properties as well, you could move on. So using that is really important.
Yeah, and one of the the secrets, and for those of you tuning into this who bought a lot of property, you'll know this, but for new investors, of which there's a lot of people listening into it, that the goal with buying property is to be able to control the property as much as possible to give you flexibility and continuity through the negotiation process. And depending where you're buying, Kev, as you know, there's different ways you can control. I bought properties beforehand where you'll come up with a price and you say, okay, job done, give us your trust account details, put some money in the trust account, and then you can draw out the signing of an exchange. You can draw out everything after that around terms and conditions, around finance approval and pest and building approval. Like, I've controlled properties for up to 6 to 8 weeks. So they sort of are not marketing it out there to give me the flexibility to work out whether or not I want to buy it. And guess what? I'm doing the same thing simultaneously on maybe 2 or 3 other assets in the same area. You must sort of trade off that sort of craft.
Yeah, absolutely.
Yeah.
So I think, like you said, if you can put yourself in a position where you've got control and you've got that leverage as a buyer being options, then it's always going to put you in a better position, because when you go back to renegotiate, you can be quite firm, right? Because you'll be like, hey, I've got another option. It's got to be at this point, or these conditions, or this price, or I'm going to walk. And you can be confident in it. Yeah, and not just bluffing. So.
Yeah, you want to control the process rather than having the agent sort of controlling the process. And there's a lot of ways that you can exit from a deal without any sort of recourse, except for, mate, if you've done pest and building inspections, you're not going to buy the place. Well, that's a cost of playing. Your solicitor should be able to help you out with stuff as well. You need to have a good relationship with them, because they know they're doing a lot of work and not getting paid for it. They might wane a little bit as well. So what's next for you? You're just going to put your head down and buy?
Yeah, exactly.
For InvestorKit?
Yeah. So our goal was to help people, start and scale their portfolio. I'm talking to so many people who just, if they don't have time, we're here to help. If they've got the time and they've got analysis paralysis, we're here to help as well. Yeah. So there's so many ways that you can kind of get stuck with the process.
Yeah.
So,
and while I got you here, I don't like talking about hotspots, and I imagine InvestorKit's more about sort of good, smart research. Which areas do you like at the moment?
I mean, yeah, we're quite open with our research as well. We lead with value. So, with us, it's all about applying market pressure analysis. You're looking at sales pressure, sales volume, market rental pressure as well.
Yeah.
At the moment, we like areas like Toowoomba, Rockhampton, Townsville in Queensland. There's a couple of them where you're looking at the affordability factor. So affordability being 30% of household income covering the mortgage. Right now, interest rate rises are a consideration for a lot of people. And what if there are areas where there's high demand and the affordability factor, people aren't feeling the pressure with these interest rate rises. So that's something to take into account as well. So yeah, there's plenty of factors that we look at. And even right now in this interest rate rising environment, we're still seeing lots of areas with growth.
There. Okay. Yeah. Well, Kev, best of luck, mate, in the new endeavour with InvestorKit. You've joined a good outfit there. They're doing some very good work. I catch up with Arjun every now and then as well to say good day and pass on my regards when you see him. What's the best way to track you down?
Really easy. Just go to kevtran.com.au and inquire there. We can have a chat.
All right. Nice one. It's Kev Tran. Go and have a look at these guys. I've sort of been around Kevin for a little while, and it's nice to see his career flourishing under the InvestorKit umbrella. I hope you enjoyed that, everyone. Remember, smartpropertyinvestment.com.au, social media, Smart Property HQ is where you'll find us. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Would you like the latest news and insights in HR, leadership and people management? HR Leader has you covered. Subscribe at hrleader.com.au.